Hi there, you're watching Your Trades on ET now with me, Shreyansi Singh and Snehi Shah. And over the next half an hour, we'll help you wind down for the trading session and really make sense of what went by in terms of the trade. And Snehi, today for the markets, it really was a tale of two recoveries, one of the Nifty and one of the Adani stocks.
Absolutely, quite well summed up, Shreyansi. Good afternoon to all our viewers as well. Let's take stock of what the day has looked like, and it's been a solid day of gains coming in for our markets. Nifty 0.3% uptick coming in on that front. Sensex also following suit with a 0.3% uptick. Nifty Bank has also held up quite smartly today, roughly 0.2 or 0.3 in the green. So good move coming on that front as well. There you have it, 0.2% uptick coming in on Nifty Bank. However, what outperformed the markets was the broader markets. Mid-cap index was up 0.6%, and what outperformed even the mid-cap index was the small-cap index because of 1.3% gain coming in just on that small-cap index. So it's been a good move coming in for the small-cap index as well. Both mid-cap and Nifty small-cap have advanced for fourth consecutive sessions. You have Nifty Energy that was up 1%. It was the top sectoral gainer led by the Adani group of stocks, the likes of Adani Power, Adani Green. Nifty Metal has advanced for the fourth session, was mainly led by Adani Enterprises. Nifty Bank is closed green on monthly expiry. Today was the monthly expiry for Nifty Bank as well, so that was going to be a key index to watch out for. But the overall moves on an intraday basis on Nifty Bank have seemed to be rather optimistic, and HDFC Bank and Axis Bank have led the day. So it's been all about the large cap banks in today's trading session. FMCG has also advanced for the fourth session. Marico and United Breweries have been your top leaders on that front. However, what did not do well today was the entire pharma, realty and IT pack. And realty, of course, under pressure on the back of that brokerage note coming in on Prestige Estates today, where it's been a downgrade coming in on the rating front. Target price has also been cut. So a negative note coming in from Morgan Stanley today, and that's why Prestige Estates was in focus. Almost 4.5% cut coming in on that front as well. But largely, this is what the day has summed up to be. And, like they mentioned, all's well that ends well, and the Nifty has ended in the green today. So it seems to be a very good day of trade for us, Shreyansi.
Well, absolutely ended well for the Nifty. Can also say the same about Ola Electric as well, because that was the stock that was all charged up after that Citi initiation as well. Citi, of course, initiated a buy with a target at 90 rupees, and that is the stock that we saw that was buzzing away in trade. And speaking of what was buzzing away in trade, of course, you did have a tepid debut come in for NTPC Green. Ever since that happened, ever since it listed at a 4% premium, you did have that stock also hitting upper circuit and making quite the move in trade as well. So NTPC Green is the one to watch out for in terms of both the listing as well as the gains that it built on after that particular listing as well. And in terms of other news flow, of course, we do have an ET Now exclusive for you, because the oil ministry is going to be pushing to bring natural gas under the ambit of the GST, and that is also an update that we're going to be very closely following and watching out for, Sneeze. So that is largely what we're looking at. But tell you what, let's take the conversation then forward with Aditya Agarwal, who's the head of research and investments at Invest4Edu. Aditya, my first question to you, of course, is the kind of recovery that you've seen. Do you think this is going to sustain at this point?
Hi, good afternoon. Thanks for the show. Oh, absolutely. I think it's more of a consolidation that we're seeing at the moment for the last three trading sessions. If you clearly take a look at the highs and the lows of the market in the last three trading sessions, you will notice a narrow consolidation phase that we're witnessing in the market. And that's very normal after a decent up move that we've seen in the market in the last week and this week. I think it's obvious that markets will enter into a consolidation. So the moment index sustains about 24,400, I think index will test levels of 24,800 and then 25,000. These are the levels I'm eyeing on the Nifty. And I'm still constructive on the fact that markets will head to levels of 25,000 in the near term. Same holds true for the Bank Nifty as well. I believe there's a bit of a consolidation that we're witnessing on the Bank Nifty. 52,000 on the downside is a strong support area for the Bank Nifty. And I think the moment it starts to trade beyond 52,400, 52,500, which is the immediate hurdle, Bank Nifty 2 will test levels of 52,700 about 53,000 on the upside. So both the Nifty and the Bank Nifty, I think, still have a lot of room on the upside and a catch up left to do. And you would see maybe a shift in the sectors, the ones which were underperforming and had corrected significantly in the market fall previously. Will see a bit of a short covering rally along with long build up as well. So be more stock and sector specific, and you would definitely see good money making opportunities still awaiting for you in the market.
Yeah, I have to say, love the excitement in your voice about the outlook going ahead. It's seeming rather optimistic for us. It's going to pan well for the streets, let's hope. But like you said, it's time to be a sector-specific and a stock-specific picker. So tell us what stocks you are picking. Where are you seeing value right now?
So Sneh, absolutely, and the optimism is not because of the only up move that we are seeing. It's because of the fact that we were expecting a bit of a correction, and after that correction, we are seeing a bump up in the market, and this will continue for some more time. I'm not saying markets will make an all-time high, but yeah, some more upside you will see. As far as stocks are concerned, I've got a couple of recommendations for our viewers. One is from the railway pack. I think after the move that we have seen in the defense counters, railway will see a similar kind of an up move, and you can see a recovery in the railway stocks as well. So IRDA is something which is looking interesting, looking on the chart setup. At current levels, there'll be a buyer in IRDA for a target of 220 on the upside with a stop loss at 187 on the downside. The second stock on my radar is Syngene. This is again one stock which, after a good consolidation, has broken out from a channel pattern, and I think on the upside it can easily test levels of 950 to about 1,000 on the upside with a stop loss at 900. So both these stocks, I think, make an excellent buy given the risk to reward is also in favor of going long at current levels.
Aditya, thanks for that view, and as well as your picks coming in. Syngene, surprisingly, Aditya, it's been one of the consensus buys coming in the previous show. Also, Kunal, Nuresh, everybody seems to be recommending. So, well, yes, just wanted to flag that off for our viewers that Syngene is something that's looking good on the charts as well as the fundamentals right now. But on that note, Aditya, we'll let you go. Thanks so much for joining us.
Well, absolutely, and it is making to his radar as well. But let's also keep it going with important commentary coming in then. And speaking about consumption, you did have Nilesh Shah, MD of Kotak AMC, who says that good festive sales is fueling this particular sector and is bullish on the premiumization trend as a theme. Then the mass market. Let's go across and listen into what else he then had to say.
Festival season, it has begun reasonably good. Apparel sales were in double digit. The festival season passenger vehicle and two-wheeler sales were either in high single digit or low double digit. In two-wheelers, post-festival demand is better than during festival period. So my feeling is that festival season has given a boost to the consumption. Now we are witnessing wedding season, about 48 to 50 lakh weddings, spending of about 5.5 lakh crore to 6 lakh crore. That should also support economy and consumption. Second half will be better than first half in terms of growth, thanks to festival season pickup, wedding, and government capex if it reaches budgeted target. Put all these things together, you can pick up in consumption as well as in investment some of the bets. In consumption, we are more bullish consumer staples than consumer durables. We are more bullish rural India rather than urban India. And we are still bullish on premiumization rather than mass market. On the capex side, the focus of the government is on road, water, defense. I think here you'll have to be very, very selective in picking up counters because there are some counters where floating stock is limited and hence valuations are ahead of fundamentals. Those businesses will do well, but the investors' expectation at this point of time is so high that it might be difficult to meet.
Okay, that's the word coming in from Nilesh Shah of Kotak AMC. But on that note, we'll slip into a short breather on this edition of Your Trades and take you through what the derivative space has been shaping up, especially keeping in mind that today was a Nifty bank expiry. We'll talk about that just on the other side of this short break, so you stay tuned. We'll be right back.
Welcome back. Thank you so much for staying tuned in. Well, as promised, let's get you the derivatives roundup then. And when you take a look at the trend for index futures for November expiry, you have a long build-up that was observed for the Nifty, and the same can be said about the bank Nifty as well. So that's what you're looking at. Let's also take a quick look at the India VIX. Let's get that up on the screen as well. Now, you did have the India VIX around those 14.6 levels. 4% is the kind of move that you saw coming in for the India VIX as well. So that largely is what you saw coming in terms of the India VIX as well. Now, let's also take a look at active call and put levels. When you take a look at active calls, call writing was observed at 24,300 as well as 24,400. for the 28 November expiry, so that was what you're looking at. And when you take a look at active put levels as well, you did have put writing being observed at 24,200 and 24,100. Along with that, the key support level that you had in terms of the active put levels was 24,100. So that largely is the kind of derivatives roundup that you had shaping up today's name.
Absolutely. You know what's interesting is yesterday, after just one negative day, you saw the derivatives inching towards the mild short build-up happening on Nifty and flat for Nifty Bank. Today we're seeing long build-up coming in on both of these indices, so that's a very interesting move coming in. Yesterday, we don't have a sight on the resistance level today, so it seems like we seem to be out of the woods for now, but we can only hope for the best. But on that note, let's talk about the big story of the day, and that has to be a stock that was locked up in 20% upper circuit today. And I'm talking about Ola Electric. Now that stock was charged up in today's trading session. Let's just understand, what has led to such a run up coming in for that company, what has aided the stock today, and my colleague Sharad is joining us with all of those details. Sharad.
Apart from the brokerage note, Ola Electric has actually crossed its IPO price of 76 rupees per share, and also from its lows seen in November 21st, the stock is up 15%. In the last two trading session, more than 10%. Now, of course, importantly, the important trigger is that they have launched their EV vehicles in the gig economy, and there are two models. There is S1, Z and gig itself, the name itself. Now, of course, the deliveries they expected to start from April next year itself, and also they have introduced Power Pod, which starts at roughly 9,999 rupees per share. Technically, it's an inverter for home use. Now, for the current offerings, if you look at it, S1X, S1 Air, S1 Pro, they are already there in the markets, but on the higher side of the pricing if you compare that with the gig and the S1Z numbers. Now, interestingly, the competition pricing, if you look at it, how they have stacked up, that is also coming into lower levels. Also, the company has regained its market share when it comes to the October numbers, coming up at almost 31%. And also this is coming in after a rise in festival sales and also an improvement coming in the delivery metrics as well. The company also stated that recently that they had laid off 500 employees to focus on the restructuring as per PTI. And also the brokerage stake, if you look at it, recently Citi came out with this report initiating a buy at 90 rupees per share, and even the foreign broking houses such as HSBC and Goldman Sachs have given a buy rating, and the target price is 137, and for HSBC it is at 110 rupees.
The take coming in, at least as far as Ola Electric is concerned, that was the stock that was revved up in trade, that had those gains of just about 20% come in on that particular counter. But speaking of gains, then there's also NTPC Green to take note of. That was locked in the upper circuit after that muted debut that we saw coming in for that particular counter. In fact, Director Finance Jaikumar Srinivasan plans to commission 19,000 megawatt by 2027 and also plans to add capacity going ahead. We caught up with him. Let's also go across and listen into what exactly he then had to say about the capacity expansion then.
See, presently our operating capacity is 3.3 gigawatt. This year we will be commissioning 3 gigawatt, adding 3 gigawatt, and the year next it would be 5 gigawatt, and the year next that would be 8 gigawatt. So that is the plan, and accordingly we have mobilized all our inputs, and we will be reaching 19 gigawatt by financial year 2017. 26 gigawatt right now, but going ahead we will be identifying more. As CMD was saying, we are tying up with the various states on a joint venture basis for development of renewable capacities. So eventually it will go up to 60 gigawatt by financial year 32.
Shift gears and look at the earnings comparison between the capital goods MNCs. Now that we have Siemens numbers also that have come out yesterday, it's been a rather good set of numbers. So now we have Cummins, ABB India and Siemens on the radar. My colleague Ria, who tracks the capital goods space closely, is here with a comparison of what the quarter gone by has looked for all three of these global companies. Ria.
We have all the numbers for the MNC capital goods companies. Overall, the numbers have been good for Siemens and Cummins, while the numbers have been a little weak for ABB in this quarter. Now, Cummins has seen the highest revenue growth in this quarter of around 31% on a year-on-year basis, which was backed by healthy domestic demand, even though the exports remain muted in this quarter due to the geopolitical tensions in the Middle East and West Asia. In terms of EBITDA growth as well, Cummins saw the highest growth on this front as well, around 41.8%.
If you like this video, then like, share and subscribe to ET Now.